James. I'm curious specifically on the Amazon front what you think of that. By the way, President Trump has his own views on this topic about Amazon. A little bit different, a little bit similar. Amazon, by the way, coming back with its own tweet saying, we pay our fair share of taxes. We've done all of this legitimately and legally.
That was a response to Biden.
As a response to
Biden. Yeah, I mean, I think in this case, it's possible for both sides to be right. I do think Amazon should be paying significantly more in taxes, and it's true that Amazon is paying its tax bill. It seems that they're complying with the law, and I think that debate highlights the exact problem. I mean, the Trump tax bill lowered corporate rates significantly, and as we know, the money that companies made from that, 90% of that went back into buybacks. So, you know, we're looking at a place where rates on corporate income tax rates should be higher. I think that they should be higher in Amazon's case. I don't think that alone is going to solve it, but I think Biden is correct, and so is Amazon. That's why we need to change the question, though,
which is, and Amazon made this point in its own tweet. They said, effectively, we think that Biden has a problem with the tax rates, not with us. And so the question is the problem these companies themselves, and there was a listing of these companies in the New York Times that paid, or the least, the biggest companies that paid the least in taxes, or is the problem with the tax code? And I think it's the code.
I think it's with the code, but I also think the problem is also how we structure our companies. So, to my knowledge, most of those companies are paying their taxes legally in the sense that they're complying with the law. It is also true that the tax rates on these companies aren't high enough. But it is thirdly also true that there have been calls for what's called a new kind of stakeholder capitalism, which actually looks a lot more like what happened with big companies 40 or 50 years ago. And specifically, what that would mean is that instead of saying corporate boards have one number that they need to be paying attention to, the bottom line, how much money is the corporation making, that they would pay attention to multiple stakeholders, just like GM used to do, the laborers, the environment.
I think companies do that right now. I think you're wrong to say that companies don't. If they don't care about their employees, the company is not going to survive. If they don't care about their customers, the company is not going to survive. Any company that thrives is because it is doing just that. It is paying attention to multiple stakeholders and making sure that it recognizes all of that.
I'm not so sure. You know, you hear a lot from these companies directly that, well, we're paying our tax rates. We're just complying with the law. So we've got to pay the lowest amount possible. And I think that I'm not asking them to donate any money to the IRS. Let's be clear. But I am saying that wages in the United States are flat. They have been flat.
We have seen many companies, including Amazon and Walmart and Target and others, that are paying above minimum wage, and it's in multiple places.
And it is still true that labor, the income going to labor versus to capitalists, is flatlined. And you see in other countries, like in Germany, where they have this what's called co-determination model, where at a board level, customers, laborers, capital owners, everyone is at the table trying to figure out how it works. And guess what? Their household wages are significantly higher.
But you think our system is really broken. This is not just about changing things around the edges. You're talking about a major...
Now, though, is you never had a $1 trillion company that got that way, $1 trillion market cap company like Amazon, when they didn't really care about the profits. So we tax on the stated profits. We have a market that capitalizes a company almost irrelevant how much profits are being made. I mean, in some countries, they tax on revenue. That's one way to sort of almost an alternative minimum tax on companies.
And what's more, I mean, in the e-commerce space, again, like it's not a particularly competitive market. I mean, Amazon owns a significant chunk of e-commerce. You do have Walmart.com. You do have a little bit more competition than you have in social networking. But I think it's wrong to say that, like, well, these companies, they're gonna die if they don't pay their laborers enough, because they're not going to be, because what we see in Amazon's case is consistently them paying, you know, near bottom of the barrel kinds of wages, and the company doing better and better.
Bernie Sanders just signed off on them. Bernie Sanders just said, okay, but you're not happy with what they've done?
Listen, I'm not here to pick on any single company. I'm here to make a case that American capitalism, as it is currently configured, is broken, because laborers and the ordinary American people are not making any more money than they did 40 years ago. And the fact that we're still wrestling with that, and that people are outraged about economic turmoil when we have 3.8% unemployment, shows us that something is structurally off.